Welcome to Real Time Recorder, everybody. I'm Zeus Caravello from ZK Research, and I'm here with Dave Michaels from Talking Points for week 29 of 2021. Dave, week 29, the summer's rolling along. We had a bit of a slow start, but we had some big news this week, right? We saw Zoom acquire contact center vendor Five9 for $14.7 billion in an all-stock transaction.
Well, they didn't acquire. They announced intent to acquire, which is, I think we're in for the wait there until you get to say they acquired them.
Yeah, and this puts to rest, though, what's Zoom going to do in contact center, right? In the last earnings call, Eric Yuan, their CEO, had hinted that wait till Zoomtopia, we're going to announce something, and that created all kinds of speculation. Yep. Well, now we know.
So actually, this news broke Sunday night. You and I both got notified Sunday night, and I was all jet lagged. And I knew it was big, but I was jet lagged, so I put out a few tweets and kind of went to sleep. You went right to work and wrote a post. You got that up on No Jitter on Monday. I got my research note put out on Tuesday. I spent the whole Monday writing the research note. So I knew it was big, but and we both rushed to get content out. But it was bigger than I thought. I mean, I don't know about you, Zeus, but I've had more conversations. I've talked to more people this week than I can't recall any other week. This was huge news.
I spent all day Monday, Tuesday with equity analysts talking about this. And there's a lot of nuances to it. First of all, it's an all-stock transaction, so Zoom doesn't have to use any of its money, right? Which is ideal. And in some ways, when you look at the price, was it expensive? Was it not? The premium was pretty low, but the Five9 stock was already trading at a pretty significant premium. And because it's all stock-based, how their stocks fluctuate will actually determine the final value. All we know it's a 0.5533 multiple of stock. So if Zoom stock falls, then the Five9 actually is worth less but if it goes up, then it's a deal. I also think that the year time to close is a little strange too. I talked to a lot of equity analysts about that, considering most of Five9's business is U.S. based. There's not a lot of European approval they have to get or Asia approval. So there's some questions as to why it's going to take that long. So there's some speculation that there could be some monkey wrenches that are anticipated that we just don't know about yet. So, but it is pretty significant. It's I thought they might acquire, but as I pointed out, it might have been somebody smaller like a Unifor or a UJet or something. I didn't think they'd go big like this, which is really uncharacteristic.
I'm with you on that one. I didn't see this one coming with Five9, but it says a lot about Five9 because Zoom is in one of the unusual positions of really being able to acquire anyone they wanted, except for maybe Amazon. But they could have acquired anyone else in the space that they wanted, and they chose Five9. And I could tell I've already had a number of conversations where that alone is going to boost Five9. I've talked to a major a carrier that is seeing already customers. We were debating between these two solutions, but now we're going to go with Five9. I mean, they really got the stamp of approval from Zoom. And, part of the story about the valuation, and there's been a lot of conversation about this, is that the companies are better together. They have a bigger opportunity together than they did separately, and I think that's going to play out. I'm hearing over and over that Five9 has risen above the pack. And I tell you, I don't pay a lot of attention to market cap. I knew that Five9 was trading, 150, 200 range, and so I knew the price of the stock, but I didn't really pay attention to market value. I was really, kind of taken aback by this is Five9 really pulled out ahead. It really shows how the market is favoring annual recurring revenue, cloud recurring revenue, as opposed to premises-based types of solutions. There's not very many companies at all anywhere near this valuation in our space, and so pretty significant move. And it's actually really significant too because Zoom is not an acquisitive company. Five9's acquisitive company, but Zoom has only made 2 acquisitions. They've been relatively small, relatively specialized, and in fact, they make a big point about how they've built all their technology, and so Zoom Phone and Zoom Video are using so much of the same stack and so many common elements. And so this is going to be a fairly significant integration challenge for Zoom to bring the whole story together, the whole stack together.
Yeah, and that's, one of the reasons they've done the smaller tuck-in acquisitions is so they could keep their technology stack intact. And so now they've got to bring 2 clouds together. So we're going to see what kind of engineering talent there is there. I also think on the valuation point, I think they sandbagged the TAM. Rowan's been throwing that $24 billion TAM around for quite a while, and all that is. People ask me how it's calculated. It's just taking the number of contact center seats that are out there, applying I think $150 per month, of ASP to it. But and that's just agents though. When you start adding in the fact that people are selling contact center seats to non-contact center agents, that the ASPs are going up because of AI and things. I had wrote in my no-jitter note, I think the TAM's closer to $50 billion. I think they really undervalued the opportunity here.
We don't even know how to measure the TAM because you've got the CRM element out there. You've got the UCAS element that is combining with the CCAS element. You've got a CPAS element. We don't even know how to really define the market to come up with any kind of meaningful TAM. I think that's a really important point. But what Zoom did do is validate a lot of what we've been hearing from some other UCAS providers, that there's a strong interest in the bundle of getting UCAS and CCAS from a single provider. This is what we've been hearing a lot from 8x8, Cisco, Vonage, Fuse, Mitel. They've all been kind of saying that this is where the market is going, and so I think that Zoom kind of ended that debate. So you could look at it two ways for the pure plays. It's either a problem for the pure plays that are only doing CCAS. There will always be an opportunity for some best of breed, but it could be a problem. Or what I'm hearing mostly and seeing mostly on Twitter is, they're more valuable now because somebody needs to acquire them. So that really brings two questions. Who else is going to be buying a CCAS provider? Microsoft and Salesforce come to mind, but there's others as well. And then who are they going to acquire? Genesys, TalkDesk. Both have issues. They're both big. They both have some legacy. You've got a bunch of smaller players, LifeSize, Edify, Sharpen, UJet, like you just mentioned. So I think we're going to see a lot of really interesting conversations happen around the acquisition space moving forward.
Yeah, if you look historically, what happens in these spaces is you have one or two that manage to remain a standalone company, and the rest either merge or get acquired. And I think if I were Tiago Paiva, the CEO of TalkDesk, I'd be smiling at that valuation. I think they're actually one of the companies that has the wherewithal to stick around and become bigger. As for who might acquire, I don't know.
I heard one thing. One counterpoint to that, Zeus, is what if Microsoft acquired Twilio? And I don't think that's very likely. I think Twilio is probably a little too expensive for even Microsoft, but I think that would be a vulnerability for TalkDesk.
Yeah, so here's the problem, though, with Microsoft getting into the contact center space. You know what I'm talking about? Microsoft is the king of the good enough experience. If you look at everything they offer, right? If you look at Teams, it's okay, but it's not the best, right? And if even like SharePoint is okay, but not the best. And even Office is gonna, I think the Google suite's much better. You and I have talked about this. You're big into Google. I don't know why I still use the Microsoft suite other than legacy, but I don't know if you can go to market in the contact center space with good enough. I think you
I don't know.
Have to have
I think you're a little too optimistic there, ZK, because most contact centers are not good. I mean, there's a huge market for good enough contact centers. It's like, hey, your call's important to us. Shut up and wait. And so I think Microsoft could do very well in that space, and with the bundled solution to the Dynamics, I have no doubt that Microsoft's going to get into the contact center space. I think what's going to happen in the future, though, in the near-term future, because now that the CCAS UCAS bundle is emerging as the obvious answer. I think we're going to have a whole new conversation around best of breed. So it was best of breed CCAS. Now it's going to be best of breed components within the CCAS. So whether that's IVR or workforce engagement solutions or co-browsing solutions or maybe things like short form video for interactions, I think there's going to be a whole new ecosystem of best of breed plugins that work with CCAS providers.
Yeah, and as far as Salesforce goes, I don't know if Salesforce jumps into it. I think they've got too many partners, and there's a lot for them to risk. I think that you would drive everybody to Dynamics if Salesforce did that. So they seem pretty happy being everybody's friend, and I don't see why they would continue to do that. But as far as the traditional UCAS vendors go, there aren't really many companies left that don't have their own CCAS. Ring's one of them, right? Although Ring has some components they've acquired. And I think they're building their own, but they could pluck off one of the...
Ring is playing both sides. They're playing that they best of breed with InContact, but they're also playing that our version of InContact is better than InContact's version of InContact because it's so integrated into the UCAS stack. So they're playing both sides of that argument. It's really interesting, I think.
Yeah, well, don't you think they do in that space what they did with Zoom? It's they partnered with Best of Breed until they didn't need them anymore, and I suspect that that's what's going to happen there. They'll build their own, and Ring's a good company, and I think they'll eventually not need InContact anymore. But it does sort of then raise what happens to InContact and Genesis, that are really, they're big pure plays. They got large market share, but they don't have the UCaaS half. So.
Just to wrap up the week, we have another story from Zoom. Actually, Zoom put out a press release, or a couple of press releases about the new Zoom apps and Zoom events. And so Zoom apps, we kind of saw this launch before. They initially launched it as Zaps. I think there was some trouble with that name, so they went back to Zoom apps. But they're really building out that ecosystem now. And it's actually becoming pretty interesting. They've got something like 50 apps in their store. They've got the obvious ones like Google Chat, Zendesk, Slack, except even Teams is in there. But they've got some really new, interesting ones that they just announced. A couple that caught my mind that caught my attention were Heads Up, which is an Ellen DeGeneres app, the kind of a game and playfulness. There was another one that's really intriguing called Dot Collector, which is I don't know, it's kind of like a polling tool, except for that you don't poll people. Instead, like Cisco's got Slido for polling, but in the Slido example, you put out a poll question and people respond. In the Dot Collector, you don't put out a question, but people respond. People just kind of give you feedback, and they give dots on a evaluation form. They say, Zeus, you are talking too much, Zeus. And so they put that little dot in there. And so you get this feedback, and it's actually organized and collected, and you can build a profile. And it's really an interesting tool. It's kind of this every man's 360 feedback report. It'll either be really interesting or disaster. I'm not sure which way it's going to go, but I think it's interesting, at least interesting right now.
Yeah, on their app side, they're just getting started there. I'm pretty excited to see what they do with it. I did like the name Z Apps, so anything that starts with the letter Z, I'm a big fan of. On the event side, that's going to be an interesting battleground because hybrid events are clearly here to stay. I think I told you at the end of last month I went to the Contact Center World or Contact Center Week event, and there was only about 500 people live, but there was 2,000 to 3,000 virtual. So as we get, Enterprise Connect this year is going to be, have a hybrid component. And so I think for the foreseeable future, we're going to have a hybrid component. And frankly, Dave, some of the virtual events that we've been part of haven't really been that great an experience. And so the more Zoom can build into their event experience to try and replicate what it's like to be there and have, that Clubhouse type of interface where you can just pop into meetings or sessions, things like that, run concurrent tracks, the better. So there is some work to do there. Across the industry. I know Cisco's big into events, Zoom's big into events, and I think that's going to be an interesting battlefront because it's certainly something that's not been perfected and wide open right now.
And to that, I'll say, it's been great to travel again. I've made 3 trips in the past month, but it also sucks to travel. I got to say, I came back from Europe. It did not go the way it was supposed to. It took an extra day to get here. All the hassles, I think that there's a little bit of a short term, like we can't wait to travel. But I think once you start doing it again, you're going to, hey, these virtual events, maybe we should look at this again. So we'll see how this plays out. So.
Yeah, well, the event calendar is getting queued up for the end of the year, so we'll see. reInvent's going to be live, and I think Avaya is going to host us in Dubai and things like that. So they're coming back. So be prepared.
Well, that wraps up this episode of Real Time Recorded, and we'll be back next week with even more exciting news.